All right. So we talked about what trading was in our previous class and what trading is not about. And then we were able to look at one of the reasons why a lot of people want to come into trading is because of okay, everybody wants the money, right? So, and most of the things we see most of the time on social media is okay. When I ask a lot of people, why do you want to learn how to trade this thing? They're like, okay, I want to start making money, or I want to have another source of income, which is good, which is very, very good. But I compared trading into, let's say, going to a university and trying to get a degree. So it's like you trying to acquire a skill. Before you can start making money from acquiring a skill, you need to first of all learn it first, right? Go through the due processes, and then once you're qualified, then the money begins to come to you. Just like a doctor who goes to university, studies for a few years, and then after that he's now qualified, he graduates, and then he gets a job and starts making the money. So that is exactly what trading is. You're learning and you're trying to first of all acquire the skill. But the difference between trading, but the difference between trading and acquiring a degree like a doctor now is that um, acquiring a degree now as a doctor is fixed. You already know that you have to go like 4 5 years. Then after you've graduated, you've acquired a skill. But remember, I told you that when it comes to trading, trading is dynamic. It is personal, right? The amount of days or weeks or months or years it can take me to fully learn this skill is going to be different from someone else because we are all from different backgrounds. Most people have come from some let's say the background or the type of training you got as you grow up can affect your growth, right? So let's say if you're someone that is a very disciplined person like me now, when I was growing up, I used to see my dad the way he manages money, and I knew how to manage money. Okay, so even when I was growing up, like I'm the person that some of my friends used to even give money to hold. So understanding risk management was easy for me. Like it was easy for me to resonate. So why there are some people that they didn't or they didn't really understand how to manage money. You see them, they are lavish with money. So it's going to be difficult for you to begin to train your mind, train your mentality, to begin to understand how to manage your risk and not to blow up your money entirely at once. So the amount of time it's going to take me to learn how to trade will be different from the amount of time it's going to take someone else to learn how to trade based on where we are coming from. So I don't know if that makes sense. It makes sense, right? So if you so it's something that is personal. So the only thing I will advise you is as we continue to transition, you should learn how to personalize. What I'll do is maybe after every class, I'll try and send you some videos that you can watch, right? Or some files that you can read and try to see if you can still make your own personal research based on those videos or reading materials. So at least with that way, the learning is not just going to be based on just our classes alone. It is also going to be based on your own personal research and your own personal findings. Hope I'm communicating. That makes sense, right?
Yes, yes, yes.
Good. So today, let's do a quick summary of what we talked about last week again. We also talked about what Forex was all about. Forex is all about exchange of currencies, right? So based on the different economies of each countries, so what we do is we track the different economies of each countries, and then we may based on the information we get, we use that to predict or to uh, once we were done analyzing, we use that to predict what the future may hold. So the key word there is may hold. Because now let's say I used an example of US and Nigeria, right? What is happening in US and what is happening in Nigeria? Then we can say, okay, US they are actually planning their economy is the forecast is that the economy is looking to improve over the coming days or months or years, right? And then Nigeria's economy is with everything that is happening, the insecurity and all, right? The economy is looking like okay, we're not going to see any improvement anytime soon, right? So what we can do now is since that is the case, you can decide to buy some dollar now, right? Let's say you're buying $1 at the moment for 1,400 naira at the moment, right? So what you're doing is once you buy $1 for 1,400 naira, you hold the dollar. Once you hold the dollar over a period of time, over the set period of time, you think that this your analysis is going to play out, right? So if you hold it for over a set period of time, and then that $1, the US dollar continues to appreciate against the Nigerian naira, right? And after it gets to that period of time, you can now decide to sell that dollar now into what? Into the naira back. Then once you've sold it back into the naira, the profit that you've made now is based on the accumulated difference. So now, before, let's say you bought it at 1,400 naira, $1 for 1,400 naira. Then you now decide to sell in the coming future, right? You decide to now sell that dollar for 1,500 naira, right? You see that now the profit you're going to be making is 100 naira.
100 naira, yes.
Yes. So that is just what foreign exchange is all about. So that is one. Now I want to also now touch on the different markets that we have, because one of the ones that I've explained to you now is the forex market, okay? But we have different other markets that we traders used to trade. So we don't only trade foreign exchange market now. We trade, there's another one, they call it the commodities market. Let me just list some of them. We have commodities market, we have cryptocurrency market. I don't know if you've heard of cryptocurrencies.
Yes.
So we have the cryptocurrencies market, we have commodities, we have stock markets, stock exchange markets. So we have a few of other markets that I don't really want to dive into, but those are just the few that are very popular that we used to trade: crypto, forex, commodities, stock exchange. So those are the few markets that we trade. So let me touch on crypto for an example and how the trading used to work now. So cryptocurrencies are different currencies, like they are digital assets, right? Like Bitcoin. Bitcoin is one of the type of cryptocurrency. We have different other ones, but one of them is Bitcoin. It is a digital asset. So how do people make money from Bitcoin as a digital asset? Now what they do now is, now we have Bitcoin here, right? And now we now have US dollar. It's almost the same thing, just like the way I explained to you in with using the forex market. It's the same thing you do with digital assets and even other markets. What you do is you compare. So now let's say we have Bitcoin now as one of the cryptocurrencies, right? We have Bitcoin as one of the cryptocurrencies. Now what do you want to do now? You want to compare it to something else, right? Another asset. So let's say we decide to compare it with dollar now, okay? So now let's say we have Bitcoin now. One Bitcoin now equals to $1, okay? I'm giving you an example. I don't know if you're following me.
I'm following.
Okay, so we have one Bitcoin equals to $1, okay? So now, as time goes on, now let's say the narrative of that Bitcoin now, of that asset, is that later in the coming future, Bitcoin is going to become the future currency of the world, because it is a digital asset. A lot of people are going to adopt it. A lot of hype is going around it and all of that, right? So now what happens now is that once you heard about all of those things, you've done your analysis, you now decided that, okay, since this Bitcoin later in the future is going to become, okay, let me see if I can, okay, I was trying to see if I can, okay, maybe in our next class now, I will now begin to go into visual explanations, okay, visual explanations, and then maybe from there you begin to understand better. So now let's say we have Bitcoin here, and then we have what, US dollar, right? And now one Bitcoin equals to $1. That means if you hold one Bitcoin, it means that you're holding $1. They are the same value. So if you sell your one Bitcoin, it means that you're going to get $1. Or if you want to buy one Bitcoin, if you want to buy one Bitcoin, you're going to use $1 to buy one Bitcoin. So both of them, one Bitcoin equals to $1. Both of them have the same value. Okay. So now you now have $1. You now decided to purchase that Bitcoin with what? $1. Okay. So now, because you believe that later on in the future, the value of this Bitcoin is going to what? Appreciate. You believe that it's going to appreciate. That is why you're using that your $1 now to buy one Bitcoin. Okay? So now, later on in the future, after all the analysis and all your beliefs and everything, later on in the future, the value of this one Bitcoin now has now appreciated. Okay? So now, let's say now that your one Bitcoin now is no longer going to be $1. Your one Bitcoin now is now going to be like, let's say, $100, $10, $50. Am I making sense? Am I making sense?
Yes.
So now, based on now that means that the value of that one BTC has appreciated. One BTC is no longer $1. That one BTC now is now let's say $50, $100, or whatever the value it appreciated to. Okay, so now you're still holding one Bitcoin. Now that you want to now resell that your one BTC into dollar back to dollar, you're no longer going to be getting just $1 for it. You're going to be getting like $100, maybe $50, or whatever the value is at the moment. So that means that the value of that one BTC has now appreciated against the dollar. So it is just an exchange of value. When you believe that this thing is going to be valuable later in the future, right, you buy it, right? So let's say you're using dollar or naira to buy it. So let's say you're using dollar or naira to buy it at the moment. Once later in the future, once that the value of that asset appreciates, you're going to be getting more naira or dollar when you exchange that whatever you bought back into the currency that you bought it from before. Does that make sense? Am I communicating?
Yes, sir.
Okay. Do you have any questions? Do you have any questions so far with what I explained?
My question now is
okay.
In this area of buying and selling now,
okay.
Is it difficult to get a buyer when you want to sell it? Because the time to sell it depends on you. I mean, right?
Yes.
You keep monitoring it.
Yes.
Then, pending the time you feel that the price is okay, that you can sell now.
Yes.
Right?
Yes.
Now, in that situation, is it difficult to get buyer?
That's a very, very wonderful question. I'm very happy you even asked that question. It means that you're actually following up with everything that I've been teaching. So that's very nice. I really commend you for that question. So the answer to that now is no, it's not difficult to get a buyer at all, or a seller at all. In fact, is in the click of a hand. Once you click, you've already purchased. Once you click, you've already sold. So that's how easy it is to get a buyer or a seller, right? So they used to call it high liquidity. When they say the stuff is liquid, that's the English we use for market. Liquidity means money. So it means that it is ready to, the money is easily accessible if you want to buy or if you want to sell. There's always somebody at the other side of the trade. If you want to sell, there's always somebody that is there to buy. And if you want to buy, there's always somebody that is there to sell. Unlike the traditional assets like land now. Let's say you buy land now, one land for, let's say, $1. Then later on in the future, the land has appreciated. And if you want to sell the land back to dollar, let's say the land have appreciated to, let's say, $100. You want to now sell the land back to dollar or naira, right? You have to first of all wait weeks or months to get a buyer. So that is low liquidity. It's not easily, the market is, the liquid is low. That's what it means. Does it make sense?
Because in that case, you start looking for agents that will assist you.
Yeah. So sometimes it can take
days. You don't look for marketer.
You don't look for anybody. Like, there's always somebody at the other side that is ready to buy, and there's always somebody that is ready to sell. Ngozi, if you also have any question at any point, you can contribute to. Do you hear?
Yeah, sure.
Okay, no
Yeah.
problem. Okay. So, is there any other question, or you understand what I just explained now, right?
Yes.
Okay. Mommy, do you have any other questions so far?
No, sir. No. I'm following you.
Okay. All right. So now let's. Then I also talked about two different things previously, right? I talked about fundamental analysis and technical analysis. That was in our previous class. I talked about fundamental analysis, meaning that your ability to predict what this asset is going to do in the future by what the government of that country are planning.
Country.
So that is what we call the fundamental analysis. You are analyzing what will happen based on the fundamental. So you call that a fundamental analysis. I explained it in the previous class. And then I also talked about the technical analysis. That technical analysis is where we're going to now start from in our next class, where I'm going to be able to start showing you the charts. Those charts, I'll start showing it to you, and I'll be explaining to you what they mean and what they represent about the market. Okay? So, from the chart now, the chart is mostly the basis of what we used to do. Let me give you an example. Let me show you an example of how the chart looks like. Although I won't really get very well into it, but let me see if I can explain to you a little bit of what it's all about. Hold on. Can you see what I'm showing you now?
Yeah.
Does it look very confusing? Does it look very confusing?
Very. I always see, but I don't understand. I always see.
Okay.
Go up.
Yes. It's usually very confusing at first. Even me, when I first of all started looking at it, the first time I started getting into it, it was looking like further mathematics to me, further maths. I mean, I hated further maths in school then. So, to the glory of God, today I'm not able to understand it very well. And so if I can really understand it, that means any other person can really understand it. It just requires time, patience, and consistency. So this is exactly what technical analysis usually look like. With your ability to look at the charts and now be able to predict what one asset is going to do over the other assets. Okay?
Yes, sir.
So if you look at what I'm showing you at this top now, can you see euro/US dollar? EURO slash at the top here, close to the charts.
Okay, all right. Yes.
So at this point now, what this chart is representing is euro/US dollar. That means the which people spend euro. I think Europeans now.
UK.
I don't know.
Okay, UK spend pounds.
Yes.
Pounds.
Euros,
they spend pounds.
Euros is meant for some countries in the European Union. I think like is it Germany and some of all those other European countries. They're the ones that use euro. So they have what they call European Union. So they classify themselves under Europe, right? So in this aspect now, what this chart is doing now is comparing European currency against the US dollar currency. You can see it very well. So what we do is we look at the chart, we use it to be able to tell where price is going to go. So remember, I made mention of something to you in our last class. I made mention of the fact that what we do is we compare fundamentals first, right? We look at what the governments are going to do later in the future. And then the next thing we do is we look at the chart as well. So we combine the two of them together, what the government of this country is going to do against the government of this country, and then we now go to the chart to now look at it from the technical aspect as well. So if the both of them rhyme, once the both of them rhyme, then we're now able to make a more informed decision. Okay? Does that make sense? Hello.
It's like I missed out this last point you said.
Okay, can you hear me now?
Yes, I'm hearing you.
Okay. What I actually said was what we do is, can you hear me? Let me.
Yes, yes, I'm hearing you now.
Okay.
You come.
Okay. So what we do is we look at the fundamental analysis, which is we're looking at what the government or the community, the country is doing, right? And then we now compare it with this
Yes,
technical, which is the chart,
this chart.
which I'm going to get
All
into it
right.
later on and explain to you how it works. So when we compare the both of them together, if both of them rhyme, so we're now able to make informed decisions. Does that make sense?
Okay. Yes, sir. Yes, sir. Yes, sir.
Although there are some people that they don't even, what most people, some people do is they can make informed decision without even looking at the chart. They only focus on what? Only the fundamental. Why there are some
Analysis.
why there are some people they don't even look at what the government of that country is doing. They only focus on what? Technical.
The
Okay?
chart. All right.
So they only focus on one of them, and then they are still making informed decision and they are still making money. But in order for you to maximize more capital, what you do is you look at the both of them, compare the both of them. If both of them are aligning, then your decision to maybe buy this currency or sell this other currency will align better. Does that make sense?
Yes, sir. Yes, sir. Yes, sir.
Okay, good. So
Yes, sir.
what I've explained so far, does it make sense? Let me close this sharing. Seems like it's what is making it to crack. Okay. So what I explained so far, does it make sense?
Yes, sir.
Okay, ma. So the next thing we're going to touch on now, before we end the class, right? The next thing that we're going to touch on now is there are two there are two different forms of making money now in this market, right? We have the investment aspect and we have the short-term trading aspect. Are you
Yeah.
with me? It's the network.
All right. Yes, I'm with you.
Okay. So I said we have two ways of
The
making
investment
markets, right?
and the short term.
Yes, wonderful. We have the investment and the short term. So what used to happen now is that the investment, when you hear the word investment, you already know that it's something that you buy, you want to wait for a longer period of time before you make money from it, right?
Yes.
Why the short term
Yeah.
aspect now is you want to buy it today and maybe after 2 3 days you've made money out of it. Okay. So one of the
Yeah.
things that used to one of the places that most traders used to get it wrong is that, can you hear me? Can you hear me, man?
I'm hearing you, sir.
Okay.
Very clear.
Okay. So now the thing now is that when you hear the word short term way of making money or short term trading now, right? That one is what attracts a
Yeah.
lot of people. A lot of people think when they say I want to buy something today, I want to take profit tomorrow. So a lot of people rush into that part. So that is what used to attract a lot of people into trading is the short term aspect. A lot of people used to frown to the investment aspect. So, but what they don't understand now is that even the short term aspect is not, you're not going to make money faster from the short term aspect. It's still going to take a long period of time for you to grow your money when it comes to the short term aspect. I don't know if that makes sense. Does it make sense?
About, yes, sir.
Okay.
I'm getting it.
In our next class, I'm going to explain to you very well the reason why